What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm going to be doing analysis on crude oil prices.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video I will show you analysis from scratch of these two ticker symbols. One of these is UCOIL and second one is CL1. It is a light crude oil futures. And I will show you my forecast for near-term and medium-term perspective. So let's start with the price chart. Let's start with UCOIL ticker symbol, and to start from scratch you have to use a daily time frame, at least daily time frame, and you have to use swing highs and swing lows in order to find out where we are on the price chart. And right here we clearly see that the lowest point was made on Wednesday 22nd of 2020, and the highest point was set right here on at the very beginning of March 2022. And definitely, most likely we have completed structure right here, but let me show you some tricky point. We might have, this is our first wave, this is our second, third, fourth and fifth. And on the first glance we can use this pattern because right here we have a simple zigzag as the pattern of the retracement. And we might have the next leg to the upside that probably might hit high targets, or we might have another leg to the downside that will break this previous bottom. But the problem is right here in the third wave, because according to Elliott wave theory we cannot have the third wave that is shorter than two other impulsive waves. And in this case right here definitely we can see this is our first, second, third, fourth and fifth. And we have to downgrade this scale, this degree, and we cannot have this wave that is the shortest one. This means this count is pretty much invalidated, and we cannot use it in our forecast. So what might be the case? We might have a different count, probably. We might have, let me delete this tool right now. We might have 1, 2, 3, 4, 5. This is our first wave. This is our second. 1, 2, very deep 2 wave. 3, 4, and truncated fifth wave as the third wave. And here is the very deep retracement. And if it is the bottom, we might have another leg to the upside. So this structure is even more uglier than the previous one. But all of these assumptions doesn't violate the rule that right here at this very point, at this point of around $70 mark, we might have a trend reversal, and from this leg, from this point we might go higher. So right now it doesn't matter which type of structure we have right here. We have completed 5-wave structure from this swing high to this swing low, and let me mark it for you. This might be the first wave, this is the second, third, fourth and fifth. And this breakdown doesn't violate Elliott wave theory rule that third wave shouldn't be the shortest. Right here definitely we can see, and we can measure it, that the fifth wave is the shortest one. As you can see, it didn't hit one-to-one extension. So this means we might see the completion of this wave, and in both cases we might have we have to have at least 3 out of 5 or 3 out of 3 waves, depending on the major breakdown. But all in all, we have to see this movement to the upside. So, and that is why we can start from here. But I will show you my detailed technical analysis on a smaller scale in just several minutes, right after we will see some fundamental news. So, first of all, let me show you this article that was published on April the 3rd, and it says, Goldman Sachs rises Brent oil price forecasts after OPEC plus output cuts. And let me show you this. Goldman Sachs has raised price forecast for Brent crude futures following a surprise announcement from OPEC plus that the producer alliance will cut oil output further. The price forecast for Brent for December 2023 was increased by $5 to $95 a barrel, while that for December 2024 was raised by $3 to $100 a barrel, Goldman analysts said in note on Sunday. And let me show you this news on the price chart. Right here we can see this massive gap on daily time frame, and it happens exactly on April the 3rd, as you can see right here. And this was the reason why we have this movement to the upside, and technically we have to see the filling of this gap by the price. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, to make a breakdown in details, we have to dig deeper, and let's start, for example, from 15 minutes time frame. So let me zoom out a little bit and let me show you this structure in details. Okay. Definitely we might have something like this. If we completed all 5 waves, and right here we have the breakout below this range of support, this means this wave cannot be the part of the wave on a greater scale, and this means most likely we completed the entire structure. And in this case we might have this is our first wave, second, probably this is the third one with truncated fifth wave on a smaller scale, this is the fourth. And right here we have again 1, 2, 3, 4 and fifth wave right here, truncated fifth wave, and this breakdown is 100% legit. Let's switch to 30 minutes time frame in order to see it slightly better. And if it is the case, we have to see the retracement. And right now we have, as you can see, we have an increasing volume on a 30 minutes time frame during this movement to the downside. And let me pull the Fibonacci retracement tool from this bottom to this top. And what do we have right here? We have to have basically a simple zigzag. Usually this retracement happens in a simple zigzag shape, and we might have something like this. And the levels where we might land might be from $80 all the way down through a 78.80 to the golden pocket range. And right here we have the confluence with the top of our first wave. And if it is the case in a matter of next several weeks, we might see this movement to the downside. But on a smaller scale, definitely we have to see some kind of bounce to see the bottom of the A wave, and we have to form our B wave. And that is how we can rely on the next leg to the downside if it is the real breakdown. And let me show you the natural crude oil futures. Right here we have almost the same structure, and we have completed all the waves as I mentioned on a previous price chart, and we have absolutely the same waves. And if it is the case, we can also pull the Fibonacci retracement tool from the lowest point to the highest one. But right here we didn't even reach the 0.236. This means we might go lower. And right here we didn't even break the bottom of our fourth wave. So to be honest, I think we will break it to the downside. And this happens, in my opinion, this today or tomorrow. It should happen this week. And right here, as you can see, we already broke it. And this means these two charts pretty much connected one to another. And that is why, most likely, from the technical standpoint, we can assume the breakout below this range. And definitely, on a smaller scale, we have to see the medium-term movement to the downside. But on a greater scale, again, if I switch to daily time frame, we can clearly see that probably because of this volume, let me show you this in details. Let me zoom in a little bit right here. This volume from the beginning, from mid of March till present day, is slightly higher than this one. This means this asset hit some kind of crucial point for the price action, because it experienced more interest from investors. And that is how we can rely on this bottom as the swing low of the crude oil prices. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack. Baby, I'm back.